go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets are panning off, and it's a pretty cautious-looking screen, if you could call it that, across the Asia-Pacific.
We were by far the biggest outperformer in Asia, in the Asia Pac yesterday.
That 674 crore rupees was incorrectly recorded as interest income in 3 quarters of FY25.
So it's kind of mixed. I mean, 30 down and 100 down on Nifty and Sensex respectively.
It's only fair for these larger companies to have diversified supply chains.
US people do still talk of a recession, even if hopefully the odds of that have fallen.
There is a bit of a cool-off in the markets. The Nifty is exactly at the 25,000 mark.
More ballistic cruise missiles that will have to be developed here in India.
Nifty is seeing a downtick of almost 0.2%, but it is still managing to hold on to that 25,000 mark.
Well, that is the day so far, and actually it's a day of individual stocks because the Nifty is lackluster. It's been that way since the morning, 50 points here, there, but so many movers. And the big theme continues to be defense, and we'll talk more about that as we go along. We're coming to you from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell. I'm Prashant, with me my colleagues Surabhi and Rima here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon.
Hi, a big week though, right? The Nifty is up more than 4%. The mid-caps have rallied more than 7%. And defense, I think we should pull up that the defense index and see the kind of gains we've had this week.
It's been phenomenal, to say the least. I mean, I was actually looking at that just now. The Nifty Defense Index is up well over. Yeah, that's just today's move. Imagine that. That's today's move. So if you talk about the week's tally, it's absolutely dizzying.
Yeah,
I mean, to say the least. Nigel.
Well, this morning I'd made that point, right? Nifty is at 25,000, but portfolios are feeling like 23,000 or 24,000. And that's why I'm expecting the broader market to do a bit of a catch-up. And today, at least, it's played out. Just take a look at the mid-cap index. Surging away, breadth of the market, 1,900 stocks in comparison to 1,800 stocks, that's declining. So it seems the Nifty next 50, the mid-cap, the small caps as well, they have some catching up to do. So let's see whether or not that plays out. But by the way, we have BHEL that I think the numbers are flashing for you on the screen. And it appears, at least on the EBITDA number, I think it's a little bit lower. It's coming at around 830 crores. That compares with more than 1,000 crores or thereabouts. So I think a mild disappointment on the operational performance, though we'll have to go through the fine print on this one. But guys, you all take it away.
Absolutely. And we'll have more on BHEL with our research team in just a bit from now. Yeah, I mean, the theme is defense, and we'll talk more about that. BHEL, by the way, is coming off on an absolute EBITDA basis. There is a miss, as Nigel pointed out. Well, let's talk about Vodafone. Now, sources are telling us that Vodafone Idea has cautioned the government that it can't operate beyond FY26 without more support. I mean, give us money, otherwise, FY26 is the outer limit. Ashmit is here with what he's picking up. Ashmit, over to you.
Well, just yesterday, we were the first to report that Vodafone Idea has moved a fresh application in the court seeking relief on account of the AGR burden. Now what we're picking up, they've sought a waiver of the interest as well as the penalty component. Now what we're picking up is that before moving the court, they had thrown a last throw of the dice with the government. They had written a letter to the government whereby they had clarified that if the government doesn't step up and grant relief, it could result in the company going into insolvency before the NCLT, and that it's going to be difficult for the company to move ahead as far as beyond FY26 is concerned. That's the line in the sand that Vodafone Idea appears to have drawn as far as the government is concerned. Now, bear in mind, the argument that Vodafone Idea has put forth in that letter is that the government is now a partner. Post the equity conversion, it holds nearly 49% of stake as far as this company is concerned, and that entire stake's value will be brought to nil if this company is pushed into insolvency. Also going on to say that the government is looking to recover 1.15 lakh crore rupees in spectrum dues. All of that, again, will not fructify if the company, Vodafone Idea, goes into insolvency, if it cannot continue beyond FY26. And furthermore, Vodafone Idea argues that this will have a cascading impact. There are over 200 million customers that Vodafone Idea has, and that there will be a spillover effect as far as the broader digital aspirations of the country are concerned. And going on to say that they're facing difficulties, that despite pumping in as much as 26,000 crore rupees from a promoter standpoint, despite the government's equity conversion, the banks are not stepping up. The banks are not giving them debt. The banks are not supporting them. And that is leading to a huge crisis in terms of management and in terms of future operations of Vodafone Idea. And it is on that count that they are making a renewed push before the highest court of the country, before the Supreme Court, for a waiver of the interest as well as the penalty component. This, they believe, will help turn the tide, will help turn things around for Vodafone Idea. But all of it, clearly from Vodafone Idea's submissions in the court to their conversations with the government, one aspect is clear, that the ship will not set sail, it will not move forward without government support. That's a clear message coming in from Vodafone Idea.
Thank you very much for that. I guess what will help Vodafone Idea is the bank funding. They've been looking to raise 25,000 crore rupees. And despite the promoters infusing money, the large QIP funding infusion that they did last year, and even the spectrum dues getting converted into the equity and the government owning 49% now, the banks have been reluctant to lend that 20,000 crore to Vodafone Idea. So that is something. So maybe in terms of a government support, the government can nudge, the banks to go ahead and lend that 20,000. And second would be, I think, Supreme Court relief. In the past, the Supreme Court, the Apex Court, had rejected all applications regarding any sort of an AGR relief. But now that we have a new Chief Justice, Mr. Gavai, I think once again, these shock and awe kind of statements might nudge the Supreme Court to grant that much needed relief for Vodafone Idea. If it doesn't come through, as Vodafone Idea says, it might just go under.
So, yeah, it's very, very interesting because basically Vodafone Idea has thrown the ball into the government's court, saying either you help us with additional
the government can't do anything.
Or,
they already
they
have 49%.
Precisely.
So they can't infuse further money. They don't want to convert more dues into equity and then make it a PSU.
Exactly.
They want it to remain as a private entity.
Exactly. So the question is, who is going to bring in the funding?
It's the banks.
Whether it's additional equity funding or debt funding, and debt funding is not coming. So,
debt funding is not coming. So it's either the banks or then some sort of a Supreme Court relief. But Prakash Diwan is now joining in. Prakash, we've spoken so many, for the last so many years now on Vodafone Idea and the fact that it's struggling, it needs more money, it needs more relief. It's always one step forward, two steps back. And now this, shock and awe kind of statements coming in from Vodafone Idea.
Yeah, definitely looks like the last straw. But, interestingly, this is happening at a time where they seem to be kind of getting their act together in terms of the operation, at least. I'm not saying that they are out of the woods by any measure, but in terms of expansion on 5G, I mean, as a Vodafone consumer, I've been getting calls about 5G introduction in certain places and, how things are so positive and all of that. And on the ground, if you see, Bharti's been talking about making noises that there should not be the spectrum charges that are due should not get waived and all that, because they also probably smelling the opportunity to get this big player out. And which in the first place the government never wanted. So it always wanted it to be a 3 or 4 player market. And that's what Vodafone probably seems to be counting on in a big way, that the government will want it to continue playing some sort of a, third fiddle or whatever. So, interesting setup, but this seems like the beginning of the end of this issue. How it gets resolved, I don't know, but it does seem to have come to an end of sorts. There's nothing else left beyond this declaration or this intent being announced.
Okay, the government so far, at least, has been committed to maintaining a 3+1 market construct. Statements coming in from Vodafone Idea seeking urgent relief. The stock price right now is 7.5%, so it's reacting positively. It's not reacting to the statement. The risk that it might just go under, it might have to reach out to the NCLT and file for insolvency. So that's not what the market is, so the stock price is reacting to. The stock price is perhaps reacting to some sort of a relief coming through for Vodafone Idea. Hopeful. Let's pull up Indus Stars as well. That's the other stock indexed to Vodafone Idea's futures, and Indus Stars will also come up.
I'm still a little curious. I'm not sure what sort of support Vodafone is expecting from the government, because I mean, nudging banks to lend has its own huge moral, implication and question mark, and we don't know if the government would want to go down that route. The only thing is it's catch-22. The government's own 49% stake gets written down to zero if indeed this has to go the NCLT way.
There are no good choices here. All bad choices, but it is what it is, and they'll have to kind of sort of deal with it. Prakash, thank you very much for that, and sort of good getting that quick word in, and we'll get you more opinion as we can sort of go along on this exclusive story that we're putting out right now. How should you position yourself in the last hour? Sachidanand Tegar is with us. Sachidanand, good to have you with us here. A quick word on the markets, at least at the index level, not very much is happening. And before I ask you for your trades, I mean, a quick word on what are you picking up in defense stocks? Any trades one way or the other? Go on.
Good afternoon, Prashant. Prashant, I think the entire defense pack is in motion, and at the beginning of this particular week, we discussed the trade setup in a stock called BEL and BHEL. I think both have delivered good returns, but so far, I think there is no sign of any exhaustion when we look at both these counters. Even at this juncture, I think it is better to place yourself in BEL. From a momentum perspective, I think the base at 350 now looks very confident. The stock may consolidate here a bit, but eventually we see this particular rally getting extended towards 405 to 435. So I think it's a good momentum breakout on the weekly scale, and we expect that this particular momentum may extend going forward as well. When we look at the Nifty, it is consolidating well around that 25,000 mark. If you look at the last 4 trading sessions, it has managed to sustain and close above its 5-day exponential moving average support. Now, this particular support is currently placed somewhere close to around 24,820. So unless we don't see a closing below the same, the expectation of a diverging trend looks bleak. On the contrary, we are expecting that this particular rally may extend towards 25,180, and eventually in the coming week we may see levels close to around 25,555. So we are advising our clients to build long positions when it comes to Nifty. A pullback towards 24,900 would be healthy. That's why one can keep a stop loss at 24,830 on a closing basis. The first target would be around 25,180. Second target would be 25,555.
Thank you very much for that. Shiju PB, Managing Partner, India Law LLP, is now with us on the show. Shiju, just 24 hours back, we understand that Vodafone Idea filed a fresh petition at the Supreme Court seeking a 30,000 crore waiver on the AGR dues. And now it's written to the government, talking about its survival, that without financial support, the survival of Vodafone Idea is at stake. How do you expect, what can the government do in its capacity? It already has a 49% stake. And two, how do you expect this to play out?
I'm doubtful whether my voice would be clear. Yes, I'm traveling. See, Supreme Court, Vodafone Idea has approached on the ground of for waiver of penalty and interest. But the chances are moderate, I would say, because there's already a clear-cut Supreme Court order, and even government also stated that even though government is holding equity shares in the VI after conversion, but it is already stated that there's a binding precedent from the Supreme Court. So chances of getting a little moderate, but still on the basis of equity or a consideration saying that considering the financial stress and strain and likely closure of the aspect and overall economy and all, Supreme Court has to change the stand. If it is lenient, it may get, but I would say it's a very moderate chance because Supreme Court has already clearly stated. And government stand also has a lot to do with what is the stand government is also taking on this issue.
Okay. All right. Shiju, thank you very much for joining in with that quick take and quick perspective. Let's see, it's a developing story. We will see if the government has any response to offer in the coming days. Thank you for joining in. Well, let's move on to the other big story of the day, of the week, of the year, you can really say, and that's defense. The theme is running red hot and strong. And once again, let's pull up the stocks for your benefit. Right now, it's the shipbuilders. They're actually in lead position. Mazagon Dock, 10%. Cochin Shipyard, 12%. Garden Reach, 10%. But then the smaller companies are not too far behind either. Many of them, like Zentech, etc., have had another Pretty good session. Let's check Hindustan as well. Hindustan Aeronautics, 5%, Idea Forge. All of them are still running around. And like we told you, the Nifty Defense Index is up almost 15-16% for the week. We caught up with Nirmal Bang's Jyoti Gupta to understand whether defense stocks still offer an opportunity or whether, the ship has sailed, so to speak. Listen in.
There's a clear urgency to replenish inventories and strengthen capabilities. Also, what we have understood and sensed from the market is that the companies have already stepped up their production levels, and scale. They've transitioned into an accelerated execution phase where they are working 3 shifts. So this proactive scaling signals that there's a potential. One is early achievement of our targets, which is something like 3 trillion by 2029. Possibly it could be achieved earlier than 2029. All my interviews, I've been saying we are replete with order books. What we need is step up of execution. Now, in the current scenario where we have post the war, we obviously need to replenish our inventories, and strengthen capabilities. So in that case, what we have consumed in the current war, we need to replenish. And of course, we've had deficit in inventories of X days, which has to be done. As far as what was discussed in the ministry, I think no comments. As far as my understanding goes, that there is a huge unfinished order book which needs to be completed in a certain time frame. Everybody must be thinking that the current valuations may appear stretched, and I feel that they're expected to be justified once you get earnings growth visibility. As order execution accelerates and operating leverage, kicks in, investor confidence in current valuation should strengthen, making them reasonable. And that on that basis, I would say HAL is my top pick, followed by again BTL and BML, which has been quite a laggard for many years. These are 3 companies. MDL, which has done its peak revenue growth, I think going forward, maybe with a lag, MDL will also start. Because there's a complete demand, not only from the, there's an overall demand from all the 3 fronts, land, army, and sea. So obviously you have to scale production not only at the air fleet level, but also in sea levels.
All right, that was Jyoti from Nirmal Bang with her perspective on the defense space. I want to focus on one stock as just an example, a microcosm of what's happened in the defense sector. Pull up Solar Industries. Let's pull up a long-term chart of Solar. Solar somewhere around, early 24, late 23 used to be a 6,000, 7,000 rupees stock. Today it's 14,000, so it's already a doubler. And that's the gain in just the last 12 months. Gurmeet Chadha of Complete Circle is with us. Now, Gurmeet, of course, identified Solar a long time back, and it's been one of his favorites. And Gurmeet, that's the real question, right? I also did some reading on who does what, and I realized from BrahMos to Pinaka, these guys are everywhere, the Solar guys, right? Making all the warheads and the bombs. The question is it all done? Is it all in the price, the opportunity, the possibilities? Or is there more to go? Do people have the risk of getting caught up if they jump on the defense bandwagon now?
So we've been lucky. We personally invested this in 2015 when it was in 3 digit.
2015, Gurmeet?
Yes.
3 digits, Solar Industries.
Yes. So pretty lucky.
I'm surprised you're still working. These are like retirement stocks, right? The multi-baggers.
No, it's done a lot of heavy lifting in our portfolios. And just to tell you, it was 8,000 rupees in February when market had fallen back at 21,800. So, on the near term, yes, it's expensive, 100p stock. But over a long term, let's say, and this is what I keep telling, that, defense is a lumpy business. You cannot expect quarter-on-quarter returns, and orders can. So, for example, when Pinaka Rocket orders got delayed by like 7-8 months, the stock underperformed when most of the market was doing well. So right now, defense is around 25% of the book. The movement has been from, a product maker, from explosives to a platform. So now they make Pinaka multi-rocket barrel system. The day before yesterday, they successfully tested Bhargavastra, which is, the anti-drone kind of a system which can fire micro rockets, for any kind of a drone attack, the Swan drone attack. And that cost, apparently, I've been told, is like 1/5, 1/6 of the other air defense systems we have. So one is the frugal engineering, which a lot of our players like Solar, BEL, Bharat Dynamics Extra are doing. And obviously the support from DRDO and the capex they have done. So if you have a 5-7 year view, the defense book would almost become 50%. And that's a high margin business. But on a near term basis, most defense stocks, even HAL, for example, after the sharp run up, near term, you should be a little careful. But I think on a long term basis, defense should be a good 10, 12, 13% of your portfolio.
Okay. All right. Hi, Gurmeet. Good afternoon and good to see you, Ben. I think from the telecom space, I think Bharti Airtel was something that you all were bullish on. You'll continue staying bullish on that, or would you all give Vodafone Idea a look, and or maybe Reliance Industries, I think, as well as part of your portfolio? So how do you play this telecom theme?
So, Nigel, couple of ways. One is obviously Bharti is one of our top 3 picks in the portfolio. Very secularity, lot of secularity in earning visibility. Right now, obviously, there's a bit of an overhang. One, the quarterly results were okayish because the ARPU was flat at about 245. And then obviously you have Singtel, offloading, and there could be more because they want to equalize the stake between the Bharti promoters and Singtel. So this could mean maybe another block may come. And that's why the market it's reacting the way it is, but it's 2-3%. But if you see last 3-4 years, the stock has been one of the top performers in Nifty. So if you see the wireless business, I think it can continue to grow at 20%. More importantly, if you see the EBITDA to free cash flow conversion, I think it's likely to improve to 40-50% now. Which means that there are a lot of high cost spectrum debt they will be able to retire, unlike Vodafone, which is struggling. And any waiver in spectrum can't be for one entity. So if at all government chips in, sometimes I don't understand the promoter has the money for cable and wire and paints, but on telecom, you don't want to infuse capital. So that, anyways, that's a capital allocation call to be taken. But I think Bharti stands out there in case there is some relief coming there. And the other businesses, which is the business part, the other digital businesses also now catching up. And it is a slightly expensive considering that you are, if you give it a forward multiple, maybe 14-15 times EV by EBITDA. But as I said, in this market, there's one stock which gives you earning visibility. So we continue to hold, and any meaningful correction, I think we'll add. We will look at more digital infra plays. I think Tejas is corrected. So we are looking at that, but we first want to see whether the orders were lost or it's just a near-term blip.
By the way, did you buy Solar at 8,000 in February?
No, we continuously buy. I, personally...
You bought in 3 digits.
I know, but I meant, did you top up at 8,000?
Yeah, so, वो कहते हैं नजर लग जाती है कई बार, if you talk about stocks too much. But, on a lighter note, we did add, and it's almost around 7-8% of the portfolio we have.
Is there any other Solar in the making? Do you see another Solar anywhere?
So we don't know that, right? But I think one stock which we got right and got very early was Zen Technology. We bought it almost at 600 levels, and that's something which has almost 23 patents. But again, very expensive, right? You saw 2600 also on Zen Tech. You also saw 1100, in a matter of 6 months. So that's what I said. You need a slightly better stomach, for kind of volatility you see in these kind of businesses. So build a core portfolio. And be focused on how much you want to buy. Sometimes we get carried away by near-term momentum. I think at this point of time, incremental addition in near-term may not be the wise idea to do. But if you get any meaningful corrections in between, I think so. We have HAL, we have Bharat Electronics, we have Solar, and we have Zen. These are our 4 defense stocks in our portfolio.
Got that. What about railway stocks? That's the other theme which often...
Sorry, 1 minute. I just finished. Otherwise, I'll have to come back to defense like you did. Gurmeet, on Zen, so you for Solar, you said they have what is the name of the system? You said mini anti-drone.
So it's called Bhargavastra, which is Lord Parshuram's weapon. It's called that. Pinaka also is, I think, the bow which Lord Shiva used. So they keep the names basis our the mythology. And Bhargavastra actually fires micro rockets. So apparently they say it's 1/5 or 1/8 the cost in terms of dispelling any swarm drone attack, and they coordinate it with the satellite. So there's a lot of coordination which is happening between ISRO, DRDO. So I think that the indigenous tech we have developed, Prashant. I mean, the kind of order inquiries we are getting right now, I mean, I can't speak about specific quantum and names because it's a very confidential information, is humongous, but we don't have the capacity. So when the street is getting excited that there are a lot of inquiries, the execution will take time. And that is where probably you may get more opportunities.
So Solar is actual physical missiles, anti-drone, And the other stock which you mentioned, Zen, which you also bought, is basically radio frequencies for anti.
So Zen basically, Prashant, is simulators. So you use simulators. You can't send everybody to the war front. You need to train your soldiers, right?
I think it's 50-50, simulators plus anti-drone.
And anti-drone and surveillance. So we have big borders and unfortunately not so good neighbors. So, per kilometer cost of surveillance, modern surveillance is quite high. So let's say, for example, the Myanmar border would probably be 800 kilometers plus. Similarly, so it's a huge opportunity in terms of covering that, right? So as I said, there are multiple vectors. And one thing good about Zen is the IPs. I think it's one of the top 3 companies in India in terms of number of patents.
I discovered that they also, by the way, own a majority stake in one of the very few drone component makers.
Yes.
Which is, again, interesting. But the stock, I mean, as you said, this is all, and this is, of course, for viewers, and I think you made it very clear, don't chase it. But on dips, this becomes...
Absolutely.
If you're convinced and if you do your work, then, when opportunities come, then you're ready.
There's one more opportunity here, which is specialized carbon fiber, which currently we need to import from Japan and US. And that's so you only can use it for commercial purpose. So if you see the wings of Tejas, a lot of fighter planes, etc., carbon fiber is extensively used. They're very specialized. And that is one place where India is trying to work around and do some, that could be a part of the bilateral deals which we have with few nations. That could be the next big opportunity. So that's
which is the
ancillary part.
Company, Gurmeet?
Does anyone make it? Any listed company?
Nothing listed right now. Sylvie, there are a couple of unlisted players here, but it all depends on getting the delicensing done and approval done. Use that for defense manufacturing.
Very interesting, Gurmeet, very interesting. I think this is a moment, and this is a moment we'll look back on and remember. Sectors at times go through an inflection point, and yes, there are excesses that get built up. But then sometimes the stories are very, very real, and then it becomes a turning point. And maybe for Indian defense manufacturers, private sector and public sector, this is that very real inflection point. Great conversation. Thank you so much for joining in and shining a light on the opportunities over here. Thanks for joining in. Have a great weekend, and we look forward to the next chat soon. All right, quick break on that note. Come back on the other side, and we'll have Vikas Khemani join in with some market perspective.
Okay, welcome back. 50 points lower on the Nifty, but it is broader markets and, of course, defense, which is the big sort of theme as we just discussed with Gurmeet. Vikas Khemani is with us, founder of Carnelian and Asset Management and Advisors. Vikas, good to have you back on the program. Thank you for your time. So defense, let's just start with that. Why not, right? I think let's get your views, Vikas. It's of course, I mean, it's the theme is great. It's multi-year. Orders are lumpy, and I think we covered quite a bit with Gurmeet earlier. But where are stocks at now? If you've given this a look, your team and you, just your perspective on the space and stocks.
From a long-term perspective, it is definitely an interesting space to look for. And my own approach towards something like this is whenever there's a euphoria, I kind of try to stay away, because I think in these times everything goes up, good, bad, ugly, and one tends to forget the real risk of what of investing, be it any sector. So I think just because we recently had a conflict does not mean that suddenly all the companies will start growing at 30-40%. Right. Of course, it can marginally improve the environment, and that and defense has been a good opportunity, and directionally speaking, even last couple of years. And we saw how, when markets corrected, they corrected far more than than rest of the space. So I feel given very limited set of opportunities, companies in that, a lot of excesses have got built from a risk reward perspective, and one has to be careful. And I'm not passing this comment across the board for all the companies, but there are, by and large, this is a sentiment of the sector. So definitely looks good, but there are companies one has to see from a risk reward point of view, and one has to be cautious and careful, and then approach that.
So don't buy defense at these levels. But is defense a part of your portfolio?
We own some companies, but we are not buying anything fresh. We've been holding for some time, but we aren't buying anything fresh.
What are you buying fresh then, Vikas?
I think nothing has changed for us, to be honest. We've been through this whole crisis. We've been kind of believer in India's story. India's story has not changed. We've been believer that this whole year markets are saying corporate earnings will be subdued, but my view is that 25-26 corporate earnings will be very, very, very good. And if you remember from our last conversation, and I said that the last year liquidity was squeezed in the system. This time around, we are in an environment of reasonably good liquidity, and that is likely to be so. And that has a huge impact on the entire corporate profits earning cycle. I think demand environment is reasonably decent. Interest rates are looking down. So, usual, we are quite overweight on banking and financials. Through the fall, we kept on buying them. We are quite bullish on the entire manufacturing space. We don't think anything is changing in that, despite all the noise around tariffs and non-tariffs. We don't think, sort of anything is sort of changing. Even IT, we've been quite reasonably. In fact, through the fall, we added some stocks. So I think through the fall also, so lots at times, it swings on one side, and noise kind of clutters the sort of segment, and that's where the opportunity comes. So I think we have not made any major hypothesis change around India's story. I think everything remains same, except the fact that in this year, early part of this year, we were adding a lot more banking, which is significantly overweight for us.
Okay, all right. Hi, Vikas. Good afternoon, and good to see you. When in the past, you've spoken about how bullish you are on the CDMO segment, from the pharma vertical. But I'm just looking at the past quarters, shareholding, and a couple of stocks you've added from the diagnostic space. SE Suraksha, you'll have gone ahead and added on to whatever you'll had. Amrutajan Healthcare as well is another one that you'll have gone ahead and built a position. Tell us a couple of stocks, if you can, where you're quite bullish and you believe that it's at that inflection point.
It will be very hard for me to comment on a stock specific, as per the compliance. But in general, we've been bullish. I mean, both the names you mentioned are not part of CDMO, but CDMO is a big opportunity. And, we've been quite overweight for some time now. We have not added anything recently, but we've been owning it for the last 1.5 years, very large position, and they've kind of done well.
Right, Vikas, as we speak, we have actually Hyundai Motors numbers that have come up on the screen. And that's looking like a pretty much okay set of numbers. A mild growth is what we're seeing on the revenue front. Margins more or less stable at around 14.3% or thereabouts. How are you approaching the auto space, Vikas? Plenty is happening, right? You have Trump's tariffs out there. You have reports of slowdown in parts of India as well. But some of these stocks have seen a big run. What do you like from it? The two-wheelers, four-wheelers, or would you play the auto ancillary stocks?
We've been playing, I think we own automobiles, so I think as public in our portfolio, we own Mahindra and Mahindra. We used to own Tata Motor, which we sold last year. But right now, I think, and then we are playing through some of the auto hanks. Other than that, I think we don't own, we own a little bit of Bajaj Auto as well. But I think auto story is quite interesting story. There's no doubt on that. Tariffs don't make much impact on as far as India auto is concerned. I think as far as the cars are concerned, we have to see a little bit more on the competitive intensity coming about with a lot of new launches. So we have to, these are all individual company specific, how many models come, what kind of growth can come. But in general speaking, I think auto, both four-wheeler and two-wheeler, generally directionally look good. Demand has been reasonably all right. But yeah, these are the large cap names, so you have to kind of take a little bit of, intermittent views as well. So we keep kind of increasing and decreasing position, but directionally speaking, we are positive in the sector.
Vikas, hi, good to have you on. So I want to talk about manufacturing because that's been one of your favorite themes for many, many years, right? Now, defense is obviously one part of it, and that's where manufacturing is working out beautifully. But what else should one be looking at in this environment? Because that whole China plus one story, it's still there, but I guess it's just very confusing because of what's happening with trade. And one day Mr. Trump says, don't make in India with respect to those iPhones. And you don't know what's happening to the chemical supply line. So therefore, what are the clear manufacturing plays that you see ahead, at least for the next 2-3 years?
One thing I must again say that I think one thing is very clear, Surbhi, from the recent past, that a lot of noise comes that goes away, right? These noises are not changing anything. None of these are going to change the long-term story of India, both in general and manufacturing in particular. Because I think if you just see all our growth drivers are in place, and each sector and sub-segment has its own growth drivers. And when we say directionally they are in place, does not mean that, they will have stupendous growth every quarter after quarter, year after year, right? There will be intermittent cycles. Like you mentioned, chemicals has been going through intermittent cycle, in the recent past. But again, there are two parts in the chemicals, also specialty chemical and, commodity chemical. Now, specialty chemical is where I think the real opportunity is from growth perspective. And there are companies which have been, I think, looking very, very interesting in that space, provided you can overlook the noise which is around. So there are, again, you have to go back and look at the individual company and opportunity and assess them. I mean, we own a couple of them and we think that they are interesting, great stories. I mean, if you see SRF, when nobody wanted to buy one of our reasonably large holding, we bought it on 2,300 levels. And when, despite all this noise and all, stock has done reasonably all right. So again, it's not, you can't really broad brush. Directionally speaking, I'm again telling you, manufacturing across auto component, chemical, specialty chemical, garments, I mean, that's been doing very well. Capital goods, defense, electronics manufacturing across, there are lots of, opportunities. But of course, it boils down to the understanding the sub-segment and the company individual, because that determines the outcome.
For you, among all the different, various facets of manufacturing that you described, for you, what looks the most convincing at this point in time? And within chemicals, I know we're not going to talk too many stock names, but just to get the theme right, would it be fluorochemicals? Would it be, SRF is obviously very big in refrigerants. And likewise, if you talk textiles, so give us, a few more nuggets in terms of what in manufacturing are you most optimistic on?
I think whatever sits between import substitution, export oriented, right? And then the companies have more. So let's say in textile, more than anything, the garmenting is a very interesting opportunities. And with the BTS in place, I think you can see a little bit more growth coming through. But structurally, that's a very positive story. Similarly, in chemicals, I think right now, agrochemicals looks pretty interesting because I think all inventories have got cleared out, the demand is picking up, agri prices have been reasonably robust across the board. So I think that segment, again, within that, few companies are looking very interesting. So again, the structurally all are positive, but there will be intermittent cycle, interesting opportunities coming about.
Okay. All right, Vikas, great conversation as always. Thank you very much for joining in.
Thank you very much.
Okay, thank you very much for that. We will slip into a break on that note. On the other side, we'll get you a few BTST calls from our experts. Stay tuned.
Welcome back. Well, the markets are still down close to around 40 points, but guess what? Your portfolio must be still feeling very, very good because the mid-cap index is up close to 1%. And as we speak, the Nifty Bank as well has sneaked its way into the green. Nagaraj Sethi joins us on the show. Hi, Nagaraj. Good afternoon. What would your call be on the Nifty? I think there's a lot of bullish sentiment that's currently prevailing. But when does this bullish thesis get nullified? 24,500, 24,800, if you could give us a crucial support level and also fill us in with a couple of stocks.
Hi, good afternoon, Nigel. No doubt Nifty has been in a strong uptrend for the last few sessions. We have seen some sharp upside momentum from the lowest after small corrections. Currently showing consolidation. I don't think that's going to have any bigger negative impact on the trend itself. And 1 or 2 days of consolidation, and Nifty could move up again towards the next hurdles of around 24,500 levels, which is the next target. At the meantime, at 25,250 is going to be a small resistance. After that, Nifty could eventually move towards the 25,500 levels as the next target. At the lower levels, 24,900, 24,850 is going to offer a strong support for the Nifty, and any consolidation or dips is going to be a buying opportunity at the lows. I have 2 stocks. First one is from a real estate front. You know that, Nigel, real estate was not performing that much during this upside bounces in the market, and recently they have started to perform from the lower levels. This stock is moving in a consolidation after the downward correction down to the 1,500 levels, had bounced back smartly and showing some kind of accumulation pattern building at the lower levels. The overall chart pattern is looking positive. Currently trading around 1675. One can look to buy at this price, and the upside target would be around 1770, 1780 levels. One can place a stop loss at 1610. And second one is G Shipping. You know that G Shipping counters have buzzed very well in this today's session. G Shipping was moving in a larger consolidation band. It has witnessed a decisive upside breakout of the crucial resistance in today's session, looking attractive at the higher levels. Currently trading around 970. One can look to buy at this point of time. Immediate target would be around 1,050, 1,060 levels. One can place the stop loss at 930.
Thank you very much for that. Let's talk about Apollo Tyres and Tube Investments. Both these stocks are higher in trade. Sudarshan now joins in. Sudarshan, just yesterday you were telling us that how Apollo Tyres Q4 numbers were subdued. There was nothing to write home about. But in the conference call, the management is sounding upbeat. They're targeting double-digit growth.
That's correct. So both these stocks, Apollo Tyres and Tube Investments, are reacting to the positive commentary that these companies have given in the analyst call held after Q4 earnings. So first talking about Apollo Tyres, Q4 earnings were a miss. Company has underperformed its peer, and 2 segments, OEM and exports, had seen a decline. But for Q1 and FY26, company believes that growth will start coming back in Q1 itself, and not only growth, it will see a double-digit growth, and both OEM and exports that had seen a decline in Q4 and Q3 of FY25 will see a growth in Q1 of FY26. For Tube Investments, results were almost in line with estimates, but commentary is looking very positive. So first, for the first time, company has announced that it has bagged new railway order of rupees 8,000 crore. It was not in public domain. For the first time in the analyst call, company has mentioned about this order. And this order of rupees 8,000 crore will be executed over next 7 years. And about railway business, company also says that it will return to the previous growth peak by the end of this fiscal. And 2 businesses, one is truck and 3-wheeler, company believes that it will break even by the end of this fiscal, and it's working on $1 billion revenue by 2029. So overall, commentary was positive for both these stocks, and that's the reason you are seeing a positive move.
In between 3-4%. So thank you very much for that. So Apollo and Tube Investments in focus. Let's also talk about the blocks today. Bharati and JSW saw blocks. Vivek is here with details. Vivek.
Well, that's right. So 2 large block deals happened in today's trading session. We had intimated and alerted you, prior to market open about both of these possible block deals that happened. So first, Bharti Airtel, Singtel, that, pre-block deal that held almost 29% stake, has sold almost 7.1 crore shares in the company, worth $1.5 billion in today's trading session. The block deal happened at a rate of close to 1,814 rupees a share. There is now a lockup of 60 days on further sale of shares from Singtel. So remember, Singtel's pre-block ownership was around 29%. 9.17% was what Pastel, the entity that sold today, actually held in Bharti Airtel. The effective stake post-block deal will now be close to 28%. Mittal Group stake, remember, is at 23%. Why are we stating that? Because Singtel today released a statement saying that, number one, that they had sold the block within Bharti Airtel today. Along with that, they are saying that they are working closely with Bharti Enterprises to equalize its effective stakes in Airtel in the medium term, indicating that there could be further blocks in the process or further blocks on the way as far as Bharti Airtel is concerned. Now, talking about JSW Infra, remember the promoters and the company had earlier intimated the exchanges that the promoter entity would need to go ahead and trim their stake to meet SEBI's MPS, which is minimum public shareholding norms. In line with that, Sajjan Jindal Family Trust today likely sold close to 2% stake in the company. Offer size of this particular block over 1,200 crore. Remember, they held 80.7% stake, which now drops to 78.7% stake. So need to watch out, because even in JSW Infra, they will go ahead and require to trim their stakes further to bring it below 75%, which is SEBI's MPS.
Okay, all right, Vivek, thanks a lot. On top of the ball as always. Well, let's hop across to Ekta. She's here to tell us about Newland Labs. Remember, the stock has corrected from around 18,000 rupees to around 12,000. But today it's lost another 6% post its numbers. Ekta, tell us more.
Well, definitely a disappointing set of numbers for what was a darling stock amongst investors. So revenue down around 15% year on year, 18% Q on Q. Margins have also shrunk to around 16% versus 28% year on year and 22% Q on Q, and a profit decline of around 59% year on year. FY25, they ended the year with a revenue decline of 5%, margins 22%, profit down 13%. The company has said that several molecules in the portfolio, according to them, are at an inflection point and growth is expected to resume in FY26. Goldman Sachs has a buy with a target price of 14,775. They say that the reported Q4 was impacted by a significant fall in the development revenues, which are generally lumpy in the CMS segment. They expect the top line to accelerate by 30% in FY26 based on monetization of the expanded Unit 3. Commercialization of molecule Cobenfy and a potential fourth molecule, and launch approvals of newer niche molecules in their specialty API segment.
Thank you very much for that. There are quite a few other mid-caps which are reacting adversely to their earnings. So Datamatics is one where the profits have declined. Stock is down nearly 7%. Precall is another one. MediAssist is under pressure, and that on volumes is down by nearly 5%. PN Gadgil, Garvare Tech, Tega, Allied Blenders. These are all stocks which are currently in the red. Even as the mid-cap index is holding up in the green, some of these stocks are reacting to their earnings. Hemang Jani is now joining us on the show. Hemang, thank you very much for joining in. You know, outside of defense, which we'll come to, the big winners this week were some of these two-wheelers. So Hero MotoCorp rallied close to about 12-13%. Compared to the rest of the peers, its valuations are more attractive. Bajaj Auto has gained about 10.5%. TVS Motors is up 7% this week. So they've gotten re-rated this week.
Yeah, good afternoon, Rima. I think, after a brief underperformance and a sideways movement, we have seen a good amount of traction come through in Hero Motors and to some extent in Bajaj and TVS also. I think the key trigger for that was, the con call of Hero Motors, where they sounded extremely positive on the growth, over the next, let's say, few quarters and year. And they're looking at a very significant, recovery, particularly driven by the rural markets. So we think that that has, driven the entire, two-wheeler space. And within the pack, we think that, both Hero Motors and Bajaj are very well placed because Hero, I think the volume growth could be about 7 to 8%. Bajaj could be also somewhere similar, And overall, we think that, second half would give you a much better growth traction compared to the previous quarter. So I think from a, next couple of quarters perspective, this space is looking quite positive.
Okay, we discussed quite a bit of defense. Hemang, hi, good afternoon. Let's just bring in our colleague Ria, who's of course been updating, and as she's had to update these numbers furiously every day because stocks have done so well. I mean, a stock like Garden Reach, Friday to Friday is up 40%. Let's go across to Ria, but not just about prices, but valuations as well. Ria, take it away.
Well, yes, defense and shipbuilding stocks have continued their rally in trade today. In fact, some stocks are up as much as 20% in today's session. The biggest gainers include Paras Defense, Premier Explosives, Cochin Shipyard, Garden Reach Shipbuilders, Mazagon Dock, and Data Patterns as well. In fact, since the 7th of May, we've seen market cap additions of up to rupees 1.6 lakh crores across the entire defense pack. Now, the key triggers that are aiding to this rally include the recent escalations that we saw between India and Pakistan after the Pahalgam terror attack. In fact, going ahead, defense equipment makers can also be expected to ramp up production in a lot of areas, which can include more focus on manufacturing low-cost ammunition indigenously. We can also see a greater push for AI-guided loitering munitions and for unmanned systems on land, air and sea as well. In fact, going ahead, the need for foliage-penetrating radars and robotics can also see an increase, and we can see a need for large-scale acquisition of stealth technology and weapons also in the future. Now, industry sources have told us that the defense industry expects replenishment orders worth anywhere between rupees 30,000 to rupees 40,000 crores going ahead, and India's defense budget, which stood at rupees 6.8 lakh crores in FY25, is also set to see an increase next year. Today, analysts also told us that defense companies are now working in up to 3 shifts in order to ramp up production as directed by the government of India in light of these escalations between India and Pakistan and the increasing tensions geopolitically as well. Now, major defense companies like HAL, Garden Reach Shipbuilders and Cochin Shipyard have also reported a healthy set of numbers in this quarter, which is also aiding to this overall increased optimism in defense stocks, and they also have strong order and earnings visibility going ahead. Some stocks that are trading near or at their 52-week highs include Bharat Dynamics, Astra Micro Products, BEL, Solar Industries, Mazagon Dock and Paras Defense as well. Other stocks, although, are still down anywhere between 10 to 33% off their respective 52-week highs, which include Forge, Zen Technology, Cochin Shipyard and Emtatech. Lastly, in terms of valuations, 14 of the 16 defense stocks that we've looked at are now trading above their 3-year average PEs.
Okay, that's very comprehensive, Ria. Thank you very much for that. Hemang, you want to quickly weigh in anything you like from the space?
Prashant, because of this entire news around the increased defense spend, the kind of upgradation requirement that we may have, we are seeing a re-rating for many of the stocks, given that we had this, entire war playing out between India and Pakistan. So I think some of the companies, particularly which have a specialized segment into either drones or the air defense mechanisms, I think that is where there is a hope that you will see significant traction in terms of order inflow. So I think Bharat Dynamics, Idea Forge are the names that we think are extremely well placed. Apart from that, Solar Industries, which has a certain component of defense and also the explosives, I think that also appears to be extremely well placed. We have to remember, Prashant, that some of these stocks have run up quite a lot. And in terms of valuations, they may look a bit stretched. But given the sentiment and the kind of news flow that you will see, probably some people may want to have some more allocation towards these stocks.
Yeah, I mean, we made that point. Don't get carried away. This is when you get carried away because everything is going up. Even as the long-term story is good. Well, we'll take a quick commercial break here. 10 minutes to go for market closing. Now, the US government has introduced a bill that could levy a 5% tax on money transfers sent by non-citizens, non-US citizens. India, the world's top recipient of remittances, sees around $83 billion a year in transfers. If the bill passes by Memorial Day, May 26th of this year, it would mean a 5,000 rupee tax on every 1 lakh sent home, with funds used for extended tax breaks. A lot of chatter, a lot of discussion on this online, a lot of opposition to this online as well in terms of what is being proposed. And remember, it's being proposed right now and this would need to pass the US Congress for this to become reality. We'll take a break, more on the other side. Stay tuned.
Welcome back. 5 minutes to go and things are very, very quiet. The index, I think, has moved in about a 30-point band over the last 2 to 3 hours, 25,000 to 25,030, just chopping around between those levels. IndusInd Bank has staged a recovery. Remember, there was this fresh accounting issue. There was about 670 crore new irregularities amounting to 764 crore rupees. But the stock is now back in the green with a gain of close to about 0.5%. Hemang, IndusInd Bank, when after the issue came out, after a point, valuations had turned attractive. There was buying in the stock. How are you approaching this entire issue now surrounding IndusInd Bank?
So, Rima, what is happening with IndusInd Bank is that... hello? Am I audible now?
Yes, go ahead.
Yeah. So, Rima, when it comes to IndusInd Bank, the issue is that every time you get a sense that the worst of the news flow is behind us, and every maybe second or third month, you keep hearing that some more this kind of issues are still there, and one doesn't really know when exactly it will end. So while the stock has underperformed and it has corrected quite a lot after the last episode where the top management also left, the comfort is still missing. So I think that if you really want to play this entire banking or financial services, then go for some other private sector banks like maybe Axis, some of the NBFCs like LIC Housing, etc., rather than having a small allocation to IndusInd Bank and getting into that uncertainty phase.
Yeah, I mean, it's interesting, right? The stock's actually higher after the news yesterday, and that kind of is, of course, talking about the fact that the market is looking ahead. Now, rightly, wrongly, that's a different point. But who'll lead IndusInd Bank? Will it be a credible player? What kind of names? Of course, it'll all have to be approved by the RBI. And typically, the bank will have to send a few names. I think at least 3 names, and the RBI will then pick depending on what they feel most sort of comfortable with. So that's essentially the road ahead. But it may be now, it may be soon, it may take some time. But that is the story as far as IndusInd is concerned. Otherwise, I mean, I think, as Rima pointed out, it's largely kind of quiet this week. But it's a good week. I mean, I think 9% of the small cap index Friday to Friday. Mid cap index Friday to Friday up 7%. The Nifty itself up 4%. And I think the Nifty Bank up about 3% or so. So it's a very, very good session coming through this particular week. I mean, I can spot a few other names here which did well. There was Apar Industries, which was up some 35%. Eclers was up 35%. Wrights was up some 34%. Kirloskar Engines about 33%. Titagarh 33%. Birla Corp, Ircon. So at least, 5, 6, 30% plus kind of movers if you sort this through from an NSE 500 broader market kind of perspective. And on the downside, not very much. All in the single digits. Really, which is what we saw today. So broad up move, I think, is what we've seen, especially for the broader markets playing a little bit of catch up to the large cap indices. Hemang, you want to leave us with an idea or two as we wrap up this week?
I think, Prashant, some of the power stocks, we do feel that there is some more juice left. I think JSW Energy, the numbers were not good, but we were quite impressed with the management commentary about the growth plans. And we do think that that theme could do pretty well. Even Tata Power, we expect very strong set of numbers, over the next couple of days. And the renewable and the traditional, power as a space should actually do pretty well. And also commodity stocks, which have seen a decent bounce back, something like SAIL, NMDC, Hindalco. I do think that there is some more, upside case for some of these names which have underperformed big time, given the stability in the global markets and the fact that the quarterly numbers that some of the companies have reported are looking quite good in terms of, volume growth, pricing, and the growth outlook. So I think these are the two, areas that we are quite positive.
Hemang, thank you very much for joining in. Just counting down to the close of today's trading session. Quiet close. The Nifty and the Sensex witnessing a modest pullback after yesterday's mega gains. The Nifty ending at the 25,000 mark with a cut of 50 points. Sensex lower by 240 points. But for the week, the Nifty and the Sensex higher by more than 4%. The mid-caps rallying. The mid-cap index up 7%. Small-cap index up nearly about 9%. So largely today, profit booking, but the action continued in the broader market. The advance decline ratio was positive. We had more than 2 stocks advancing for 1 in the red. As a sector, there's only one which stands out really, and that's the entire defense and railway pack. The Nifty Defense Index gained 15% for the week. BEL up 4%. Outside of that, you had Cochin Shipyard, you had Mazgaon Dock Shipyard, HAL, BDL, across the board, big moves, double-digit up moves coming through. Railways had a very strong session, lots of interest in RITES, IRCON, RVNL, as these stocks have gained close to about 25 to 30% over the last couple of trading sessions, Friday to Friday. Quite close, but it's been a very strong week for our markets. We'll take your leave on closing bell. Thank you for watching. Don't go anywhere. On the other side is our special Editors Roundtable.